Okay, so an oilfield services giant takes a $200 million direct hit from conflict in the Middle East, and yet somehow they rescue the narrative by becoming a custom builder for Nvidia's AI data centers.
Yeah, welcome to 2026. I guess if you cannot drill for oil, you just drill for data now. It is quite the pivot.
It really is. You are listening to Earnings Unscripted, and today is April 24th, 2026. We are unpacking Q1 numbers for SLB, ticker SLB, which, if you're not familiar with them, they are basically the plumbing of the global energy sector. They build the heavy, complex infrastructure.
Right. They sell steel and engineering, but suddenly they're selling code and cooling systems. It is a fascinating shift, especially because the raw earnings numbers are honestly a little bloody on the surface.
They definitely are. Let me rattle those off real quick. And by the way, everything we talk about here is just our personal opinion, strictly not financial advice, so please do not base your life choices on our chat, okay? So revenue came in at $8.72 billion, which is down 11% from last quarter. Adjusted EPS hit 52 cents, so down 33% sequentially. And that pre-tax operating margin shrank to 15.2%.
Down 340 basis points on margin in just 3 months. That hurts. But the market mostly shrugged it off. I mean, they had a steady rally all through the first quarter. But even just looking at the tape today for the earnings reaction, the stock closed higher by about 2.5%. There was a weird moment, though. Right at 11 Eastern, when the earnings call started, shares took a very sharp $1.50 dive.
Oh, I saw that. It looked like an algorithm just panicked on a keyword, and then human buyers immediately stepped in.
Probably. The market realized the pain was localized. The sudden revenue cratering was, almost entirely geopolitical. We're talking force majeure events and facility shutdowns in Qatar and Iraq. It's not a structural demand problem for their services. Plus, the data center solutions segment practically jumped off the page.
Yeah, that came in at $141 million, up 10% from last quarter, which obviously compared to their multi-billion-dollar well construction business, it sounds tiny, but being named a modular design partner for Nvidia, actually building these hyperscale factories, it's just wild for a legacy energy crew.
Well, if you look at it from an engineering standpoint, who knows how to handle massive power demands and thermal management in hostile environments better than an offshore oil contractor? The underlying physics translate perfectly.
Okay, I had not thought about it like that, but you are absolutely right. The engineering DNA is the same. Let's actually get into the details on those operational costs, though, because management warned about some lingering headwinds going into Q2.
Right. They actually quantified that headwind. Management is projecting an incremental 6 to 8 cents of EPS drag for the second quarter just from these Middle East disruptions.
Which sounds like pennies, but I mean, you multiply that across 1.5 billion shares, and it is a massive chunk of change.
Oh, it is huge, and it is not just lost top-line revenue. The sneaky part is where the costs are coming from. Lapuch mentioned the biggest line item impacted right now is logistics and transportation, and then right behind it is raw materials derived from petroleum.
Okay, the irony of an oilfield giant getting crushed by expensive petroleum. You cannot make that up.
Yeah, you really cannot. But see, the margin squeeze kind of makes sense. The thing that actually caught my eye in the 10Q was the cash flow. Free cash flow went negative, minus $23 million. A year ago, they were up over $100 million in Q1.
Okay, but is not Q1 usually a little messy for them, like seasonal incentive payments and things like that?
It is partially seasonal, but the main culprit is what they called delayed collections in the Middle East.
Wait, so they did the physical work over there and now they just can't collect the check?
Exactly. It's a stark reminder that energy service companies act as these massive shock absorbers for geopolitical violence. You have these huge sovereign clients, conflict hits, force majeure is declared, and suddenly SLB just has hundreds of millions of dollars trapped in accounts receivable indefinitely.
Wow, that is a very real-world consequence. It's just frozen capital.
Completely frozen. And strategically, I think this is exactly why they are so desperate to pivot into software to get away from physical risk. Because right at the same time, they signed a definitive agreement to buy the subsurface software portfolio from S&P Global Energy.
I saw the headlines on that, but S&P is a data company. B is hardware? So what's the play? Just buying up market research?
No. It's way deeper than that. They want to feed all that subsurface data into their agentic AI platforms. The software literally controls the rigs now. Lapuch gave this unbelievable quote on the call. He said automated footage drilled increased by 145% year on year as customers adopt digital and AI-powered solutions.
Jeez, 145%? So the AI is practically wearing a hard hat out there.
Pretty much. Customers are using algorithms to physically drill the wells. It avoids labor costs, it reduces error, and for SLB, they get to sell a software subscription instead of just a metal pipe. Software eats the drill bit.
That is genuinely fascinating because on one hand, you have this futuristic self-driving drill bit, but then on the other hand, they still can't collect cash because a physical border in Qatar or Iraq is closed. It feels like this really awkward adolescence between hard tech and digital.
That's the exact tension right now. High-margin software dreams getting dragged down by messy physical world realities. And they're also carrying massive startup costs on new projects in places like their OneSubsea division. So the cash drain is coming from multiple angles right now.
Okay, so with cash getting squeezed today, but this shiny autonomous AI future supposedly on the horizon, where does this leave them heading into the rest of the year?
Well, honestly, it leaves them aggressively confident, which is weird. But despite the trapped cash and that upcoming Q2 drag we talked about, they are still promising to hand back over $4 billion to shareholders this year.
$4 billion when free cash flow is currently sitting below zero? That takes some nerve.
It does, but they are basically banking on a global energy panic to bail out that short-term pain.
Oh, right. The replacement cycle.
Yes, exactly. The world has lost something like 500 million barrels of structural reserves recently, and sovereign nations are realizing they need to lock up physical supply. So SLB is tracking over $100 billion in new deepwater project approvals, pulling forward into next year. Offshore Africa, the Americas, those areas are expected to just completely swallow the Middle East losses.
That totally tracks with what Lapuch was saying on the call. He had this quote where he said, "The fragility of the energy complex right now proves the long-term value of oil and gas." Like, basic geopolitical anxiety is just forcing countries back into the deep ocean.
Yeah, it is raw energy security. And that is the underlying irony here. They're going to use that highly traditional, heavy metal, deepwater cash to quietly scale their data center business up to $1 billion in ARR by year end.
So it is just the ultimate barbell strategy. You're drilling miles into the ocean floor to pay for a hyperscale AI factory.
Physical reality, subsidizing the virtual one. It's a pretty brilliant hedge if they can pull it off.
It really is. All right, I think that is the perfect thought to leave you with today. We will definitely be watching to see if those two worlds balance out next quarter. Thanks for hanging out with us, everyone.
Catch you next time.
Before the mics go completely cold, if you want these earnings drops to just show up in your feed, go ahead and follow the show. As a quick aside, we do build Earnings Unscripted with the help of AI, which is how we instantly scan through hundreds of pages of dense financial filings. But the conversation itself is entirely human. We would love to hear from you or take your ticker requests, so drop a note to earningsunscripted@datamadness.ca or grab the X link in the show notes.
See you next time.